Good evening, all. This is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 3rd of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer trade charts, and know how to issue trading signals. This is a video for paying subscribers at ctmthebiggerpicture.substack.com. It's published on YouTube after a delay of a week. Right, I was asked an interesting question a couple of days ago, and that was, if I'm right about the coming about the oil crisis just getting started, about oil prices going far higher, inflation in the US going higher, potentially a number of the, or possibly all of the big Western economies tipping over into recession. Why is it not showing up in the market? Well, the fact is, the market often isn't that good at actually identifying things right in front of it. For instance, it was extremely optimistic, I remember, from summer 2008, and we had a big rally before the shit really hit the fan. And that was because people didn't want to accept that. I mean, it was all already pretty obvious what was happening. There was, the subprime mortgage crisis was just getting started. It was already turning heavily south, and yet there was a big rally. And people often just don't want to accept that something is happening. I mean, COVID, I was talking about it in a post. And as I said, by the middle of February, most of the big supermarkets were either struggling with toilet paper supplies or they'd run out. Why? People were preparing for the pandemic. What was the market doing? Making new highs. There've been a lot of examples over the years, but I did take the question seriously, and I thought about it quite a bit. But the fact is, what I'm basing the oil section of it on is industry, high quality industry analysis, and that really is they're all singing the same song, which is that actually there's going to be a big problem, and after the Strait of Hormuz is opened up, it's going to take quite a while to fix things, and it's going to get worse before it gets better. And that, I mean, still, of course, the Strait of Hormuz has now been closed for over 2 months. Even when it does open up, there's going to be a significant delay as the kinks in the supply chain get worked out. There's trouble coming. Now, maybe the equities result is going to be relatively muted, but I find it hard to believe it's not going to fall at least 10 or 15% from here. And honestly, I think it's likely to be more. In terms of oil prices, minimum it makes 150. And there's something for me to show you here, actually. This is, in my view, just a good illustration of how disconnected the futures market is. This is, hang on, wait a second. All right, this is CL, every contract over the next year. Yeah, and you can see the peak is now, and then it's heading down steadily over the next year. I'm back down to pretty much pre-war levels. This is disconnected from reality, and actually the futures are disconnected from the real price that people are paying for oil collection now at various places where the Brent oil prices is at 130 or 140. Crude oil prices are far higher than this. I don't know whether the futures markets are being manipulated, but this is a level of wild optimism. And what is that? It's mispricing. You could buy one of these contracts. Pick up the December contract, say. And personally, I think you can pick that up at 80, and you've got a pretty good chance of being able to sell it at 180. This is a major mispricing, and if you just assume that everyone, if you disagree with everyone, and sometimes they're all wrong. I remember there was a classic example in 2014 when I was pushing the case for a big bond rally as QE2 was winding down. The whole market was convinced that bonds were going to go down, and obviously, the Fed would be buying fewer bonds, and that would reduce bonds demand, and that would mean bond prices would go down. But the problem is, if you looked at the history of what happened at the end of QE1, that wasn't what happened. It wasn't really even close to what happened. A big rally happened. and I had all the patterns for the rally. I had the history for the rally. Honestly, but one of my closest friends from university, he was a bonds trader. He was fully up on it. He just thought, well, how could these people all be wrong? And had his first losing year in 20 years. And everyone was wrong, and I was right. Hardly anybody was right. But the fact is, sometimes the market just misprices completely, totally misses what's coming, and the market, and partially because so many people believe something, then everyone else goes along with them. Analysts don't get fired for being wrong at the same time as everyone else. They get fired for being wrong when everyone else is right. And as a result, you get, it's analysts in the main tend to be a bit like sheep. They go in a flock. They stay close to other analysts. So because a lot of these people don't have any real skills. So in terms of actually being able to make any reasonable forecasts on their own steam. Anyway, so that's where we are. Do I think that I'm right about this? Yes. Am I necessarily right? No. Anyone can always be wrong. But actually, I think the balance probability is with me. So we'll see how it goes. All right. In the meantime, obviously, I wrote a post. I was talking about targets on the upside for Qs and for SPX. And hang on, sorry, that's a chart I was working on. Right. Okay. Hang on. Bear with me a second. Okay. I wrote a post a few days ago, about 9 days ago or something, talking about a big rally that I thought we might well see on equities. And in terms of that big rally, I think we're about halfway through. Could it fail here? Yes. Am I seeing much sign of it failing here? No. In terms of SPX, I was looking for a test of this trend line here. And I've got that trend line in about the 73.70 area at the moment. And that's the target I'm looking for. On Qs, I did notice actually I misstated it. I was talking about 680, but actually that's not where the trend line is. The trend line is about 690, maybe 692 at the moment, and that's the target I'm looking at on Qs. We will see how that goes. I'm still thinking it might get made. Those are very much on the bigger picture, the obvious trendline targets. If we are making a significant high here, and I'm thinking we may well be making a significant high here, so we shall see. All right, in the short term, yes. No current negative divergence. Obviously, we have gone higher. Short term, this no longer is looking like a double top, and it doesn't look like a wedge here either. I've done the main work in terms of the current structure on the 15-minute chart. One reason I was saying that I thought this would go higher was because there wasn't much structure. And generally speaking, that means it's going to continue in the direction and build some structure. So that's what it's been doing so far. NQ has been proceeding higher. We are actually getting a little bit of negative divergence here, but I'm not seeing much reason for this to turn around at the moment. RTY, we had a bull flag break up, and that made the target at the retest of the all-time high. I'm not sure we've yet seen that on the RTH chart. I think we might be just short. YM, again, we had a bull flag. Again, it's gone up and retested the high. But this isn't the main high. I'm thinking this may well go higher and retest the all-time high. In terms of DAX, this looks like a flag, which is breaking up towards a retest of this high here, and I'm thinking it might well do that. ESTX is the same. Nikkei is just kicking around near the highs it made a couple of weeks ago, really. It's this is in a more vulnerable position than the most of the Western stock markets, because most of the oil that was coming out of the Strait of Hormuz was going to Asia. There are some real shortages in, particularly in the Philippines. It's been a big problem, but across Asia, this is causing more of a problem. Less so for China, because China has built up very high reserves, and of course has switched over an awful lot of its energy use to renewable sources, so it's increasingly insulated. A lot of the stuff that isn't renewable sources is still coal, which it's going to be likely eliminating over the next few years as it completes its transition over to mainly renewables. All right, let's have a look at the bigger picture charts. Okay, but with me a second. All right. Okay, looking at the daily charts, someone was, I was talking to a friend and he was saying, oh, well, we're not even close to the daily upper band. The daily upper band is blown out at this stage. It's very hard to reach the daily upper band when it is rising this fast. So we're not likely to reach the daily upper band again. I've got that currently. We had the high on Friday was at 72.72, and the 2SD upper band was at 100 handles higher. And by the time we reached it, it would then be significantly higher still. So this, in terms of the 3SD upper band and upper band rides at this stage, after a rise this fast and this hard, generally speaking, it's not a real issue because the bands have run away. In terms of the sell signal, we've got an RSI5 sell signal fixed, and that's still going, and we've got a weak RSI5 14 sell signal fixed as well. In terms of the hourly chart, no current divergence, but obviously we're continuing higher. Could this still be a double top? Yes, but the higher we go, the more likely that this is to be the left shoulder on a head and shoulder pattern. On the 15-minute chart, if we can hold it, we've now got our support trend line. I've drawn in a couple of potential resistance trend lines, and I'm watching for a pattern of some kind to form. That is likely to be a rising wedge, although this, I think, is the potential channel that could be the case, but would require a particularly strong move up. Likely, this is going to resolve into some kind of rising wedge. All right, looking at the cues, we've got a weak RSI5 sell signal fixed. We've got an RSI5 sell signal brewing. This could just turn, but I'm thinking it's probably got a few more days in it. The level of unreality in the market is high, and I think it's going to take a while for people to realize that actually, we're likely to be reversing fairly hard pretty soon. In terms of the hourly chart, we've still got an RSI 14 sell signal fixed. Hasn't really done enough for a retracement for this to reach target. On the 15-minute chart, again, I've got a decent looking support trend line, and I've drawn in a couple of resistance trend lines. All right, looking at Dia. Dia, we retested the high here. We've gone no higher at the moment. I'd quite like to see this reach the retest of this high here at 503.37. But in terms of the bull flag, that is already made target. In terms of the hourly chart, no current divergence. On the 15-minute chart, again, we've got a support trend line here. I'd like to see this go a bit higher and give us a rising wedge. Although I would say that unlike the others, this actually had an original nice looking channel, and we may just retest the high. This actually, if it was on its own, I would be saying would be a perfectly acceptable place to reverse. Do we absolutely have to have better pattern setups? No, but we usually would. And at the moment, with this going up like this, I'm not seeing any reason to think this would be different so far. All right, looking at, hang on, wait a second, right, that would be. All right, looking at IWM. IWM on the daily chart, we've got possible RSI 14 sell signal brewing. We're not going to get anything on the RSI 5, and we had almost, I think, reached the high. We've got that high at, hang on, for some reason I don't have the legends on here, 279.79. We got up to 279.81. All right, we did make it. This means that we've got a potential level top here too. I didn't really have a decent pattern here, but I had one which was vaguely kind of okay. This I think would be okay if we were to reverse here. It's SPX and Qs which don't look ready and which have been rising the strongest. We shall see. All right, looking at DAX, flag breaking up, leaning towards seeing a retest of this high here at 24.8K. I'd be surprised to see a retest of the all-time high. In terms of Nikkei, we've got an RSI 5 sell signal fixed, and that is still in progress. So really, if it was the rest of the market excluding SPX and Qs, I'd be seeing a case for dropping directly from here. In terms of SPX and Qs, they look as though they need higher. And I'm leaning towards seeing that. And if we do reach my trend lines, which I'm thinking we might, then I'd be seeing that is the ideal short entry. So we shall see. All right, great. Let's have a look at DX. All right, DX, we've got 60-minute buy signal is fixed. We broke down and almost made it back to a retest the lows. I think this is a little bit of a rally. And we might go back and retest the lows here at the moment. This obviously was going up quite strongly when there was a perception that oil was going to be going up. At the moment, well, my perception is that oil's likely to rise a lot from here, but the general market perception is not the case. So maybe we'll come back and retest this low. If so, that could be the second low of a double bottom. Not seeing an awful lot interesting on the other currencies, really. We've still got this IHS, which broke up on USD, which hasn't made target, although it got reasonably close. GBP USD, nice uptrend. USD JPY, this was central bank intervention. And since then we've got a double top that's broken down with a target in the 154.46 to 154.68 range, but we've also got a potential little lower bottom here that could break up and retrace with a target, I think, in about the 159.3 area. USD CAD, continuing downtrend. This is not a bull flag. Australian dollar, nice looking potential little level top, and NZ, decent looking little level top here too. All right, let's have a look at these on the bigger picture. And all right, US dollar. The RSI 5 buy signal made target. We've returned. Obviously, the big picture here is whether we've got a big double bottom that you can see here. That's broken up with a target in the 104.52 to 105.239 range. And I was thinking, given that we've got this very nice long-standing bull flag set up here, which I would love to see make target, although I'm not seeing anything the administration is doing that would inspire anyone with confidence in the future of the dollar. So it's fighting reality, but I think a high enough, given that we've been seeing a move up on oil as US dollar with oil as oil has been going up. If oil heads up to the 150-200 area, which I'm thinking it well might, then we could possibly see this move up here into the 114.78 area. Would it surprise me if that move failed? Not really, no. So we will see how that goes. All right, looking at USD, not a real lot in the short term. We obviously got the mirror bear flags here that match. Inverted, obviously, that match the US dollar bull flag. So this is a nice pattern setup. Might not play out, but it still is a very nice pattern setup. This is a wedge here. It's more of a channel on USD, but in effect, they are all the same. In terms of USD, not a lot to give us short term, no divergences. We've got a nice looking double top here, which is broken down and rejected quite a long way. GBP USD, we've got nice looking double top here, but it hasn't broken down yet. Nice looking rising wedge too. And this should get down to the next obvious target within the wedge would be the wedge support, which is down in the 130.5 area. Looking at USD JPY, pulled back a bit here, but I'm still wondering about if we see a move up on the dollar, whether we could see a retest this high here at 162. Not a lot to see on the daily chart. We do have a weak RSI 14 sell signal, but it's reached the possible near miss target already. But is this a potential level top here? Potentially, yes. Looking at USD CAD, obviously we've been trading this reasonably large range here for over 10 years now, about 11 or 12 years. In the short term, RSI 5 buy signal fixed. I quite like to see it go back to the top of the range, which is in about the 1.48 area. Don't know where that would depend on the dollar going up though. Australian dollar, we have a little double top here, and you can see that on the daily chart. Hasn't broken down yet, but I'm thinking if we are going to see a big move up in the dollar, then this could play out, and it would have a target in about the 64 area. In terms of NZ, we've got this triangle that's been forming since 2000. We are trying to break up from it. If dollar goes up, it's probably going. This is a bearish overthrow, and we're probably going to break down. But if the dollar goes down instead, and I got to say, there's really not a lot just to point to in terms of the fundamentals to inspire you with confidence in the dollar here. If the dollar does go down, then this will go up. All right, let's have a look at bonds. All right, here on ZB, hang on 1 second. Yeah, here on ZB, I'm leaning significantly bearish. We had a 6-minute buy signal that's reached the possible near miss target. We saw a bit of a rally, but I think this was a bear flag, and it's heading back to the lows. And in terms of the bigger picture, I'm thinking this could go down a long way over the next few months, and potentially we could have a full bonds crisis. In terms of ZN, this looks like a bear flag, which is broken down with the target to retest this low, and my expectation is it's likely heading there. Looking at the bigger picture, on TYX, this is a rising wedge, and the next obvious target would be a new high for the decade, above 51.53. In terms of TNX, we have a bullish triangle. In terms of FVX, which is the 5-year chart, we've got another bullish triangle. In terms of TLT, we got a bearish triangle. Kind of a theme here. This makes sense because on the bigger picture, on TYX and TNX, which are the 30-year and 10-year Treasury yield respectively, we are pretty close to the highs, and we are forming decent-looking inverted head and shoulder patterns. Bit unbalanced on the right shoulder, but nonetheless perfectly decent. If we see a breakup from here, then that would have a target in the 9.5 area, and that kind of sounds kind of wild for 30-year yields. But actually consider that if oil goes up to the 200, possibly 250 area, I mean, actually to reach the level of the all-time high adjusted for inflation would itself be about 225. These aren't actually wild numbers. And actually, in terms of the amount of the world supply which has been seriously affected, this has very much the potential, and may already be, the biggest oil supply shock of all time. So this could go up a lot. If it does go up to those kind of levels, then I've been reading estimates that American inflation would go back over 5, 6, maybe 7%. If that's the case, then actually these numbers don't look that wild anymore. We've got a big psychological level in the 5 to 6 area. If we can get over that, then we're actually moving into the kind of territory where countries that are as indebted as the US and have as little of a plan to get the deficit under control, the kind of area where their interest rates live. So we will see how that goes. But we've got another one of those on TNX. They are nice, and they haven't broken up yet, but if they do, then they could run. So we shall see how that goes. All right, let's have a look at the CL chart. Brent crude first. 60-minute sell signal reached possible near miss target, slightly off the highs, but this was a new crisis high that we made last week. CL also made a new crisis high in terms of this future. We had a sell signal, and that made target as we pulled back a bit here. I am thinking this level of irrational optimism, belief in what the White House is saying about the Strait of Hormuz, this could last another couple of weeks, and maybe we could see another significant decline. If that is the case, I'd be seeing that as a buy opportunity. In terms of HO, didn't have a sell signal here. We did get back up to new crisis highs. This is a potential level top, but I really don't think it is. RBOB, we'd already made this made new crisis highs first, and has gone up very considerably. 60-minute sell signal is fixed, and that's now reached the possible near miss target. NG, seeing a bit of a rally here. I would like to see some rally here because this falling wedge here was, well, we've seen some big declines. And really, I'd like to see a bit more of a rally before we take the next leg down, which I think is probably what's coming afterwards. Okay, let's have a look at crude. All right, Brent crude is getting back close to the highs here. In terms of where we are on the patterns, we have the initial double bottom here, which I was writing about at the beginning of March. That made target quickly. We have a larger flag target, which is a retest of this 2022 high here at 134.91, and I'm expecting that to be reached. I'm really not seeing any reason to think it won't be reached, and then after that, it'll likely make a new all-time high over 147.50. In the short term, RSI 14 sell signal fixed, not paying a lot of attention to it. We did have an RSI 5 sell signal, that's already made target. In terms of WTIC, we had double bottom here, that made target very quickly as well. We've also got a flag target up at a retest of 126.42, which I'm expecting to get made. And we've also got a long-standing, i.e. broke up in 2021, I think. But we've got a double bottom that on this time scale is still valid, and I've got an extension. It made the first target, and I've got an extension target up at a retest of the all-time high. I think it's a pretty good chance that's going to get made too. In terms of the daily chart, not an awful lot to see. In terms of heating oil, we had a double bottom which made target quickly, and we had a flag there too. That's already made the target, and we've already made it back up to a new all-time high. In terms of the daily charts, RSI 14 sell signal fixed, and the RSI 5 sell signal, which also fixed, has made target. I pay more attention to the RSI 5 ones, but actually the RSI 14s don't have a bad track record. But I'm doubtful about that making target soon. We shall see. All right, in terms of gas oil, again, we had I think it was an IHS actually on heating oil. Was it? Yeah, it was. In terms of gas oil, we had a double bottom that made target. We've still got a flag target up in the 412 area. I'm really thinking that we're likely to see American gasoline prices heading up to, the same as the 2022 highs or higher, and inflation is likely to rise considerably as well. There is no sign of the Strait of Hormuz opening. This is going to cause the best estimates are that basically, before the crisis, I was talking to a friend about the oil market, and I was just saying there's about 2 or 3 million barrels a day excess in the market, i.e. to play around with. Since then, about 13 million barrels a day have been taken out of the market, and that's going to leave a deficit of 10 million barrels a day plus, which the world's got to cope with. Now, obviously, some reserves were released, and there is still some oil on the sea. The estimate I was reading from the industry was that basically all of that is mopped up, including the reserve release, by about the 10th of May. After that, the rubber starts meeting the road. So I won't be looking for this current period of irrational optimism to last much longer than that. We shall see. But it's striking that the strait is still closed. So I'm finding that really mystifying. But I think it's just a pride thing. Trump has to go home with a victory, otherwise, that's a shock to his ego. So because really, I think it was pretty obvious. In fact, I was writing at the end of March, talking about the best thing that Trump could possibly do at that stage was just declare victory and walk away. They've considered doing that, but they haven't done it. I don't think the Iranians are going to give them anything. I don't think they are bending his ear, wanting a good deal. I think this is all just fantasy. All right, looking at natural gas. Natural gas has not been affected by the Strait of Hormuz, and I'm not really seeing much reason to think there would be. But we've come down an awfully long way in a fairly short time. You can see that this was the 2022 high, which is up at 10.04. But actually, recently, at the beginning of 26, we were up at a high in the 5.65 area. Since then, it is considerably more than halved, and we only had a tiny little boost when the Iran war started, and that was given back quickly. In terms of what we're looking at here in terms of a pattern, I think this is a bear flag megaphone, and the obvious target would be a retest of this low here in the 1.696 area, I think. Could that be the second low of a double bottom when we get there? Yes, it could. So that is what I'm looking for. And I think I'd like to see a bit of a rally here, and then I'd like to see it fail. In terms of where to go with the rally, I'm thinking somewhere in the 2.85 to 3 area would be fine. I'd be surprised to see it reach the 200 DMA at 3.4. Okay, great. Let's have a look at precious metals. All right, okay, GC, we are still just hanging around. Not doing a great deal. We had an IHS which broke up with a target in the 5111 area, and that hasn't made targets, and we have seen a potential alternate double top breakdown with a target down in the 43.30 to 43.60 area. And that's not been doing anything either. Now, I think we're kind of in limbo in terms of equities and oil. We're in a period of calm before the storm starts again, I think. The question is, when that storm starts, is this going to be a flight to safety destination, which in my view it should be, but in the crisis so far, it has not been. But I think that may just have been because gold was forming a bull flag, and that was just something that was happening, and it wasn't really affected much by the crisis. We will see how that goes, but gold trading sideways at the moment. Silver, arguably, this looks like a bear flag, which is broken down with a target to retest the low. No sign of that actually happening. Palladium kind of looks like a bear flag too, although a messy one. Platinum, decent looking bear flag, broke down with a target to retest the low. We are not close to that. HG, we've got a double top which is broken down with a target in the 5.844 area. I think this is more likely to make target, but I would note that if that's going to fail, you would often see a double bottom or an IHS form, and this is a potential IHS forming. I'm wondering if we might see a retest of this high. And actually, given that we're seeing such a period of irrational optimism on equities, that's got to be on the table. All right, let's have a look at the bigger picture on those. Now, gold, we have a beautiful bull flag. Now, we might see it a little lower here, but I think this flag is going to deliver, in due course, a retest of the all-time high. And the next target within the flag would be the flag resistance currently in about the 50-30 area. I'm leaning towards seeing that. We could go down a bit more first. In terms of the daily chart, no current divergence. We have an RSI 5 sell signal, and that's made target. In terms of silver, obviously we went wildly off the beaten track here, but we've got a decent looking bull flag here too. I'm leaning towards this heading back up and retesting the high. So we've already had this this break up. We've seen a impulse up. We've seen a retracement, and I'm thinking we might be about to head higher. We shall see. In terms of signals, we've got an RSI 14 sell signal that reached the possible near miss target, and again we had a target, an RSI 5 sell signal, and again that has made target. In terms of palladium, leaning towards a reversal to the upside. We have actually got an IHS which is broken up with a target in the 25.50 area, and we came very close to going below the right shoulder and failing that IHS, but it didn't make it. So as long as that continues to hold, I'm leaning towards the upside and the IHS target, which is in the 25.50 area. In terms of the platinum chart, we've got an RSI 14 sell signal fixed, but again, we had an RSI 5 sell signal. Again, it's made target. Again, I'm thinking this may well be a bull flag. In terms of copper, we made this all-time high here at 658, and I am wondering whether we might head back up and retest that. We don't have any signals here at the moment. We had an RSI 5 sell signal there as well. That has made target. We haven't really got anything else, and I am wondering if this might be a bull flag setting up a retest this high here at 6.583, but it's not showing a great deal of movement. If it doesn't make that retest of the high by the time equities make their high, then chances are it is not going to. And if we're going to see a decline in equities and a big rise in oil prices and much turbulence in the market, that's unlikely to be good for copper prices. In terms of GDX, we've still got RSI 5 sell signal fixed on the weekly. The RSI 14, RSI 5 sell signal made target. The RSI 5 sell signal on GDX also made target. I think this is probably ready to go back up. We might see another retest of this low here could give us a decent buy signal on GDXJ. On GDX. On GDXJ, again, the same. And pretty much the same sell signals across the board. We shall see how it goes from here. But would I be happy and would I think it was credible if we just resumed the uptrend directly from here? Yes. But once we start getting into significant problems on oil, and that starts rippling out into the rest of the economy, there is a big question in my mind about whether gold is going to be a flight to safety destination. It should be. And if it is, then I would have thought that would be good for gold. Okay, let's have a look at the other commodities. Okay, KC. Still looks like a bear flag forming. SB, we've got an IHS which is broken up with a target in the 1520 area, and I'm not seeing anything currently to suggest that won't make the target. CC, this is a beautiful bear flag channel. CT has gone higher. We've got a double bottom that's broken up. We had a bit of consolidation here, and it's gone up to higher highs. I'm still expecting to see more upside. Lumber, we saw a bit of a spike down here. Recently rolled the contract from May into July. But I'm expecting that wouldn't have had a big impact. So I was a bit surprised to see this big move. We'll see how that goes, but I think this looks like it's resuming the downtrend, and that's what I've been saying was the natural thing for it to do. ZW, I've been waiting to see whether we break up from the double bottom here, and we have broken up from that. I'll talk more about that on the bigger picture chart. But the two laggards we've got are, of course, corn and soy. Both of these are also affected by the fertilizer urea, which is not coming through in decent enough quantities. And we've got, I think, across the board, crops not being planted because of fertilizer shortages in the last month or so. That's going to feed through in prices. I've got lovely double bottoms here, and on IHS forming on soy. I'm thinking these have a pretty good chance of all making target. But at the moment, corn hasn't broken up. Soy hasn't broken up either. ZL, where I don't have a pattern, pretty much has broken up. So that's more or less what I'm hoping that soy can follow it up. Live cattle, I was saying that we might resume the uptrend after this flag, and we have resumed the uptrend so far. We're seeing a bit of a pullback here. We've got a 60-minute sell signal fixed. This could be topping action, but my lean is to the upside. On lean hogs, we've had a bear flag breakdown. We almost made it back to the retest of the low. I'd quite like to see that fully retested, and then this be a double bottom going higher. If we see a continuation any significantly lower than we are than the low we've got right now, then that would be well below the 61.8%, which would cast my overall view that this is a bullish consolidation into more doubt. We shall see. All right, let's have a look at the bigger picture on coffee. Okay, coffee. I would note that I was looking at the weekly chart, and you could make an argument that this actually kind of looks like a bull flag. I'm really not expecting it to be, but it's just I drew it in because there is a case for it. If I was just looking at it with nothing else in mind in terms of the history or where the market is at the moment, I'd be wondering about a bull flag. So just to note that. In the short term, we've got an RSI 5 buy signal that's reached a possible near miss target, and I'm thinking we are rallying a bit here, and we could be forming a bearish flag or triangle. We had an IHS which broke up here, and that failed. So really, sooner or later, I'm expecting to see a retest of 275.33, and it may resume the downtrend because we got wildly out of the usual trading ranges on coffee, as we did on cocoa. Looking at sugar, I do have a head and shoulders target below the 9 area, which I always mention because at some stage that may happen. In the short term, we've got this nice looking falling wedge here, and we've got this IHS breaking up, and that is a fit with the next obvious target within the wedge, being this wedge resistance in about the 15.75 area. We shall see how that goes, but I'm quite liking a bit more rally here. Don't know how far it's going to get. And I'm not expecting to see a big reversal, but I do think this has got more juice in it. The RSI 5 buy signal made target. We do have a little potential sell signal brewing here, so I'm watching that, but I'm expecting it to go higher. In terms of cocoa, we also went wildly outside usual trading ranges in 2023, 2024, and that has fallen basically back to earth. We're seeing a bit of a rally here. I'm not expecting any major long-term or fireworks on this, but we're seeing a bit of a rally. This looks like a bear flag at the moment. And if it is a bear flag, then it's setting up a retest of the low here at 28.46. This is the same flag I was showing you on the hourly chart. In terms of cotton, no current divergence, but we've got a double bottom here, which is broken up with a target in the 88.64 to 89.13 area. In terms of the daily chart, I am looking at quite a lot of decent negative divergence, but I'm thinking that I'd like that to play out, and I would lean towards that playing out after we've made the targets here, ideally. In terms of lumber, we have a double top that's broken down with a target in the 35250 area, and we've got a bear flag that hasn't broken down yet, but when it does, that would have a target in the same area. We've been forming the flag for over 3 years now. I'm expecting that to deliver in due course on lumber. In terms of the wheat chart, we got a double bottom there. That's broken up, but it's not really made as strong a move as cotton so far, but it has at least broken up, unlike corn and soy. That's got a target range in the 739 to 742 area. I'm expecting that to make target. Corn, I'm expecting to break up from this double bottom. When it does, that'll have a target in the 624 to 640.5 range, and I can't see any obvious reason looking around at the moment to think that wouldn't make the target. In terms of soybeans, we've got an IHS forming. When that breaks up, that would have a target in the 1560 area. That's the most ambitious in terms of where it is relative to the 2022 high. But still, I think this will be prime time for it to make it if it's going to in the next few months, as we see the blowback from the fertilizer shortages and increases in costs for American farmers from the shutdown of the Strait of Hormuz. All right, let's finish off with a look at crypto. So Bitcoin, we've made a full retest of this high here at 79.5. This has been rallying a little more. This might be developing into an alternate flag. For instance, I could run a trend line from here. I'm not really expecting to see an awful lot higher. In terms of negative divergence, nothing on the daily here at the moment. We made the possible near-miss target in the RSI 5 sell signal. Hourly chart, no current divergence. All right, looking at soy. We have seen, well, barely noticeable rally over the weekend, but we have got back up, and we are testing the daily middle band and the 50-day MA. That might go a little higher from it, but bigger picture, this really looks as though it's heading down, and this actually is just a blip. In terms of the flag here, we've got a flag which is broken down with the target retest the low, and we seem to be widening into a bearish consolidation triangle. This could go a bit higher, and we do have an IHS which is broken up with a target in the 97.66 area, but there's been no sign of that making target so far. Actually, this little head and shoulders, it almost fell, but not quite. The right shoulder low was at 81.31, and the low here was at 81.38. But at this stage, I'd be a bit surprised to see it make the target. I think we're just marking time until this goes down and retest this low here at 67.65. The low to retest on Bitcoin would be at 60.1K, and on Ethereum, which is basically doing similar stuff. I'm wondering about a retest this high. We've already seen that on Bitcoin. But really, this is a fairly rough bear flag by the comparison of the other ones. But in due course, I'm expecting to see a retest of this low here at 1746.93. All right, great. In that case, that's a wrap. Everyone take care. I will catch you guys again on Wednesday, and have a good start to the week. All right, cheers.